Hey everyone, welcome back to Corporate Decoder, the place where we untangle the messy world of corporate filings. Today, we're diving into a report from AgEagle Aerial Systems, and let me tell you, it's not exactly smooth sailing, more like a bumpy drone flight. AgEagle Aerial Systems filed this report with the Securities and Exchange Commission. Think of the SEC as the government's corporate watchdog. This particular filing, a Form 8K, is like a quick update companies put out when something important happens. In this case, it's about changes to some warrants, which are basically options to buy stock. This report is dated April 4, 2025, covering an event from a couple of days prior. It's all about a deal they made with a company called Alpha Capital and Stealth, and it involves something called warrants. Basically, Alpha got some warrants a while back that let them buy AgEagle stock. The company had a deal to sell something called units. Each unit contains one share of the company's common stock, which is a regular share. Along with the common stock, the unit contains two warrants. A warrant is like a coupon that allows the holder to buy more shares of stock in the company at a later date. There are two types in this deal, Series A and Series B warrants. Think of it like buying a burger and getting coupons for future burgers. AgEagle made a deal with Alpha Capital, who owned a lot of these Series B warrants. To change the terms a little, they changed the warrant terms, and Alpha exchanged some of the warrants they previously held for shares of the company's common stock. The first change removed something called a floor price limitation. This sounds complicated, but it just means there was a minimum price the stock had to be at for Alpha to use their warrants. Since that minimum price wasn't a problem anymore, they got rid of it. Next, they removed a protection against something called anti-dilution. This is in the event of a stock split. This event protects the investor from losing money if the company decides to perform a stock split. It is now removed. Alpha also swapped some old warrants called Series F for 88,908 actual shares of AgEagle stock. It's like trading in old coupons for the real deal. AgEagle issued shares to Alpha in exchange for those warrants. The company claims this didn't need to be registered with the SEC because it was just a swap with an existing investor. So what does this all mean? Well, it seems AgEagle is trying to clean up its warrant situation. By changing the terms and swapping warrants for shares, they're simplifying things. But remember, issuing more shares can dilute the value of existing shares. Now, let's step back and look at the bigger picture. AgEagle is in the drone business, a field with a lot of potential, but also a lot of competition and regulatory hurdles. Simplifying their financial structure could make them more attractive to investors, but they need to show they can actually make money selling drones and services. One of the biggest risks for AgEagle is that the drone market is still developing. Regulations are changing, and there's no guarantee that their technology will stay ahead of the competition. They need to keep innovating and finding new ways to use drones to solve real-world problems. In conclusion, this warrant shuffle is a small step for AgEagle, but it's part of a larger journey. They need to execute their business plan, navigate the regulatory landscape, and prove that drones can be more than just toys. This is a speculative stock with a lot of risk. Thanks for watching. If you found this breakdown helpful, please hit the like button, leave a comment and subscribe for more corporate deep dives.